What makes a better investment, investing into the share market or investing into property? This topic has been debated by many as history has shown them both to be ideal for long-term wealth building. Generally, it's pretty noticeable that people will gravitate either towards one or the other. So today I thought it would be a pretty interesting deep dive into comparing how these asset classes have performed against each other over the past century. Welcome back to my channel. My name is Reece, and in today's video, I'm going to be doing my own take on what makes a better investment, investing into the share market or investing into property. Point blank, these two asset classes are very difficult to put on the same playing field. There are so many variables within both of these asset classes which cannot easily be identified, accounted for, or predicted, which definitely cause the prices of these types of asset classes to fluctuate. We have to ask ourselves, what are we comparing here that would actually be useful? Because I'm not going to compare house prices in metropolitan Adelaide compared to the performance of the S&P 500 over the past century. That would just be silly. You wouldn't really gain any useful information out of doing that. However, we can look at statistics that are captured for both of these types of asset classes, and we can discuss what makes them good investments, which might help you determine which one you might want to invest more of your money into. So with that in mind, let's start by looking at property. Investing in property is a long-term investment strategy. The simplest way to explain it is to buy property, hold property, never sell property. See? Super simple. And if we look at historical property prices and compare them to today from anywhere around the world, you'll see that in most places, property has appreciated quite handsomely, and anyone who was able to invest in those earlier days and has held on since, all the way through all of the big crashes along the years, would have come out with a decent profit depending on where they are in the world. And to keep it really simple in this video, let's look at 3 different locations around the world, starting with Australia. I actually found this interactive website which shows house prices across all major cities over the past 50 years. What's really interesting about some of the charts in the comparison when adjusted for inflation over that period, what it shows us here is that house prices have appreciated far quicker and higher than our dollars have based on the rate of inflation. If we only considered inflation, today's average house price in Adelaide, which is where I live, would be sitting around the $150,000 mark. However, the average house price in Adelaide at the time of recording this video is sitting just above the $500,000 mark, or 3.3 times more expensive than what was indicated by these charts. And just to show that this isn't unique to Australia, here is a chart showing house prices in America reaching all new time highs in 2021, even after the 2007 global financial crisis. And again, here is the UK showing similar type of growth as well. As a snapshot, it's clear that over time, property has outpaced the rate of inflation, making it an appreciating asset, meaning anyone who had invested and held through the crashes and earlier in their lives would be in the green for their investment portfolios in property today. Based on this trend as well, property is usually regarded as a relatively safe investment, especially for those who have time on their side and for people who don't like to take big risks. To further add to team property, if the purchase you make is going to be for the purpose of it being an investment property, you are generally going to generate income in the form of rent, which adds to the wealth building concept here, as well as depending on where you live in the world, you might be available to access some pretty generous tax breaks, which can help again with that wealth building journey. And hopefully the rental income from that property is able to help alleviate some of the costs associated with owning that property, whether you have a mortgage and use the rent to pay down the loan every time it's due, or you have maintenance costs on that property where rent can cover them to make sure that the property is kept up to scratch, or even improved in circumstances where you want to add value to the home. Now, there are a few risks with investing into property, and I'm just going to touch on a few in this video. I have made a more in-depth guide to the risks associated with investing in property, and you can find the link down in the description below. If you're interested in learning more about that topic, I highly recommend learning about it, especially if you're someone who has not purchased property before. I think it's a really helpful video, and I'm really glad that I made the video talking about the topics I do within. While you're at it as well, if you could quickly hit that like and subscribe button down below, it really does help the channel grow. I really do appreciate the support. It does not go unnoticed. So thank you for doing that and taking the time out your day to quickly do that. Anyway, risk number 1 is that interest rates rise too quickly, putting pressure on your ability to service a mortgage. This is something to definitely get your head around and understand that in a modular world where interest rates can fluctuate pretty quickly depending on what's going on in the world, you need to be cautious and understand your ability to make repayments at a higher interest rate. I'm going to leave interest rates rising there. I talk about it more in the other video. Like I said, feel free to give that a watch after this one if you're interested. Risk number 2 is not being able to generate income from the property, whether it be an owner occupier, you're living in it, so you're having to pay all of those upfront costs at once, or B, you're relying on income from rental income to help, like I said, alleviate that mortgage cost. If you're unable to rent it out and you lose that source of income, you could potentially be under what's called a cash crunch, where you need to start stressing about where you're going to get money from to be able to make those repayments. It's again something that definitely needs to be taken into consideration. You should never assume that you're going to be able to make bank from renting out a property you've just purchased. Overall, for the topic surrounding property, it usually takes time for property to fluctuate in price. That's going up or going down depending on what's going on in the world. Generally, a lot of steps need to happen and a lot of bad things need to happen. Lots of news press needs to come out about the market, and then it takes time for people to actually act upon selling their properties to crash a market. It's not something that happens just overnight or super quickly. In the other direction of this is a pandemic started here in Australia, for example, and house prices boomed, which is not what people thought would happen. My point is that still over a period of time, something like 2 years, it took us to go from reasonable prices, what I would classify reasonable at the time, to where they are now, which is just downright crazy. And I was stupid enough to buy a house with my partner during that period of time. So just understand that people and their actions, people get emotional with property. It's something that the prices will always fluctuate, but generally speaking, it takes time for them to go up in value significantly, and the same in reverse. With that out of the way, now let's discuss investing into the share market. Investing into the share market is a completely different game altogether. There is no secret sauce, there is no method or formula that will tell you the right time to invest. Depending on the type of investment strategy you choose to follow, there will be opportunities to make significant gains over time and as time goes on. However, in my honest opinion, I find that investing into the share market is far more riskier than investing into the property market. It can take time to save for a house deposit. So where are you going to park your spare cash in the meantime? Or if you're not willing to be patient enough to save up for that deposit in fear that you might get priced out of the market and then just be dwindling on cash that is reducing in value because of inflation, this is where parking cash in the share market can be of benefit to you. And this is because you can invest any amount at any time in most circumstances. And to back that up, let's look at 2 different indexes just for the sake of looking at some stats for this video. Let's start with the ASX 300. This index shows us the performance of the top 300 performing companies within Australia, leading all the way back to 2000 when it first came online. Again, just like the property market, even through 2 major crashes, it has still managed to grow to new all-time highs. With an average return sitting somewhere between 7 and 11%, this again would have made a pretty decent investment or place to park your money for the long term. Now let's look at the S&P 500, which measures the value of the stocks of the 500 largest corporations by market capitalization listed on the New York Stock Exchange, which also happens to be the largest stock exchange in the world. At the time of recording this video, if you had started investing anytime prior to the past 5 years and were still holding today, currently your investments should be in the green if you were investing into the market as a whole. In addition, you can also earn passive income by investing into the share market through earning dividends. This is where a company that you've invested in says, thank you for trusting me with your money to build my business. Here is a piece of the pie. Here are some of our profits as a thank you for choosing us to invest your money with. This is a really great thing because it's another way to build your investment, build your wealth. It compounds over time. I myself have been adding to my investment portfolio over the past half a decade now, and it's growing quite nicely. So again, something to really grasp is another way to continue building wealth other than the fact of the shares and stocks just going up in value from those companies building themselves up. This is another way to add to that. Investing in dividend stocks is definitely a way people build their wealth. It's a strategy that lots of people use and something worth looking into if you're planning to invest large sums of money into the share market. Definitely something worth understanding. Now, just like I did with property, there are also plenty of risks with investing your money into the share market, and they are definitely worth understanding before committing to any type of purchase. The share market, in comparison to the property market, can be much more volatile. This is because large sums of money can be handled very quickly. A wave of bad news, some fear, uncertainty, and doubt can definitely cause the markets to flop very quickly, just like we saw at the beginning of the coronavirus pandemic, where basically everything went on sale. And I scooped some of those stocks up myself and they've performed quite well since. But my point being that a bit of fear in the market can cause big declines in value in your portfolio. Like I said, look at how the markets reacted at the beginning of the COVID-19 pandemic. That drop would have seen a lot of people who sold out losing large amounts of their portfolios. With no way to predict what could possibly happen on any given day, especially in today's day and age where there's worldwide news coverage of everything going on at any time of the day, any time of the week, it can be nerve-wracking to put your money into an investment like this, because compared to property where you actually earn and take ownership of a property and a piece of land that you pay for, with stocks, you're kind of just investing on paper. You're putting money into a system and trusting that it will spit out something in return, and it's not always guaranteed. That's why investing into the share market is something that I personally am a little less diversified into compared to property. I'm much more invested into property at this time in my life. It might be something that changes over time, but it is something worth understanding that the risks are something definitely worth weighing up and taking into consideration. It's kind of why I'm talking about it in today's video. Now, before I wrap up, the disclaimer that I need to put in here, and it's something that should be said in almost any video talking about topics like this, is that you yourself, before investing your own money, need to do your own research. You need to know what you're investing into, and you need to understand why you're investing into whatever it is you're investing into. Understand that you are never guaranteed to make money when investing, and that you should be willing to only invest money that you are comfortable losing. Treat it as a scenario like that, and you should come out feeling a little bit better if you do actually end up losing out. Personally, I do believe a balance is needed. You should explore all of your options, and there is no right and wrong. Like I said, it's really quite difficult. It's something that takes time, practice, and effort to maintain and build a solid portfolio over time. It's something that isn't going to happen overnight. Bit of luck here and there, sure, but to build strong and healthy portfolios, it's a time-based game. Time will tell if my investment strategies are going to pay off and help me build my wealth to a point that allow me to live a comfortable retirement or even early retirement, fingers crossed. There is nothing other I can do than be consistent with my strategy and stick to my plan as it adapts over time. For you, the viewer, if you're interested to see what specifically I'm doing when it comes to investing and how I manage property, feel free to check out my playlist on the channel. I think there are some really good videos in there that would be insightful and helpful to anyone who is looking to learn more about these asset classes and what they could potentially do themselves in that space. For now, that's where I'm going to leave you. Today was just supposed to be a bit of a discussion talking about the share market and property, comparing them, talking about risks, and I think I've overviewed it pretty simply, but in a way that people can digest easily. So hopefully it was insightful, helpful, and you got something out of it. If you did, like I said, please hit that like and subscribe button down below. It really does help the channel grow. It definitely doesn't go unnoticed, and I really do appreciate the support, and I will leave you there. Have a good day, have a good week, and as always, I will see you in the next one. Bye for now.